My first degree is actually in Geology and Geophysics, so I started like as a hardcore kind of, I was going to go to do my master's in earthquake prediction, and I was going to sort of study the world and everything else, and then I found out you could earn more in banking, and that's where I went to. They gave me a nice car and a mortgage and a house and buy a flat in London and a car in the first year. This is what mattered. And I think initially, you leave college and you look at things and money is important to you because you don't have any, right? So you're important. But the real lesson for life, I think, is that actually money's not the most important thing. I would say in my career, the mistakes I made were when I moved jobs for money, or I moved jobs because the guy on the desk next to me got paid more than me and I got pissed and I was going to move and do something else. So first of all, people are talking today about what matters to you and how you develop your career. One thing that's really clear is managing your career is very, very hard. Most of it's an accident. Let's not even pretend that 20 years I've got my game plan, right? It's year 5, what am I going to do? I'm now going to do this and I'm going to move to something else. Tear it up, throw it in the bin. It just doesn't happen like that. I started in banking, and I went to business school in the States. I was fortunate enough that one of my professors was Myron Scholes, who wrote the Black-Scholes option pricing model. I wrote a paper on option pricing. I put it on the front of my CV, and I went to Wall Street and got loads of job offers. It's very easy, right? You put that on the front. And that was a fantastic time. So I was a trader for a long time on Wall Street trading derivatives. And I was doing that kind of thing. And if you're a trader, you generally move your career forward. And then you get promoted above your ability, really. You get promoted to manage other traders. And then it's sort of time to do something else, I think, because younger, faster people are always coming up behind you. So I really wanted to get involved with technology. And I was one of the people who started a company called BrokerTech. And BrokerTech is one of the world's largest OTC exchanges for fixed income and other things. And that was my first experience of really stepping out into an entrepreneurial environment from a big company. And the next lesson of life is don't work for a big company, don't work for a small one, work for the company that suits you. It doesn't matter where you start, it matters where you end up. Because BrokerTech, we hired an office, one in Lombard. It was above the Coq d'Argent restaurant on Lombard Street. And the address was One Poultry. And the chief operating officer is called Ian Chicken. We used to ask for taxis, so a taxi for Mr. Chicken for One Poultry. They thought it was a made-up name or something. So, and when we started the company, so we're all big Wall Street guys. We're giving up the security of the Wall Street blanket to start an entrepreneurial company. We had one office, one room, and all the desks faced 5 of us in a room, and we came to work in chinos and polo shirts, and we thought we were pretty cool. And when we interviewed people, we had to hire another room in this rented office to do the interviews. So it was what was the name of it? Regis. Regis was the name of the company. So Regis offices, you walk in and you hire the room by the hour for an interview. So somebody would come in really keen for an interview, fancy room. They'd start work on the first day and they'd say, so where's my office? No, that's your chair. And we had a chair around the desk. We had so little room, we had to use to interview people literally in closets. I once interviewed a candidate in the stationery cupboard because we had no office space. So it's a stationery cupboard, quite a big stationery cupboard. We put a desk in the stationery cupboard to interview somebody. And this guy came in and he was so nervous, he was sort of shaking. He disappears with me into a stationery cupboard. That's a bit dodgy for a start, right? Secondly, I put some water there and I said, would you like a glass of water to calm down, relax? He said, no, I don't need any water. And he was still shaking. And I said, his name was Shane. I said, Shane, take some water. He said, okay, I'll take some water. He leant over, he tipped the water all over himself, right? So he didn't want the water, he tipped the water, and then of course he's leaving, he's in the stationery cupboard with me, he's had the interview, he's coming out, he's soaking wet, and people are looking like, what's going on here? Anyway, BrokerTech, great company. We raised $100 million to start the company, we raised another 160, and we sold it to ICAP 3 years later for $370 million. So those were the days when you could invest and you could look at new technologies, and the key thing is you must look at what the exit strategy was. It was either an IPO, because that's why it started in the dot-com boom, or a trade sale, and it was a trade sale. That was really my first involvement with running trading systems and running markets, an OTC system, essentially like an exchange. And then over time, I moved into other roles for my trading career. I had 20-odd years in trading. And then I went to work for NYSE Euronext, starting as head of derivatives. And I was the CEO of the Life Exchange, the London Futures Exchange, and at the same time running 3 other exchanges in the States as well, some of the days John referred to. And we were going to merge our company with Deutsche Börse. That didn't happen. The European Commission stopped it happening. And then, NYSE Euronext, And then at that time, we made a bid for a small exchange called the London Metal Exchange. It's metal, by the way, not metals, metal. London Metal Exchange, okay. London Metal Exchange was bought by the Hong Kong Exchange in 2012 for $2.2 billion. And its profit in the year before it was sold was $11 million. $11 million, you sell the company for $2.2 billion. Sounds like a good deal to me. Hong Kong Exchange bought it. And they saw the potential for a market to diversify into commodities because they're really an equities exchange. And they also realized that it wasn't really a for-profit exchange. It was owned by its members. It was basically a risk transfer mechanism at low price. So the challenge for me in taking this job, because after NYSE Euronext, by this time I'd been in the market 30 years, why I took the job was really two things. One was a chance to completely commercialize and build an exchange, basically from scratch, really. All the functions had to be retooled. And secondly, Hong Kong's part of China. China's where the big growth opportunity is right now. We have the USP in there. And so those are the two things that made me take the job. And here we are a few years later. First quarter this year, the LME Group built its own clearinghouse, installed its technology, etc. Is now in the first quarter 21% of the revenues of Hong Kong Exchange. And the Hong Kong Exchange had a market cap of $40 billion in that time. So just to put it in perspective. At the end of the day, what matters is the balance for everybody between extrinsic rewards and intrinsic rewards. You've got to have both an intellectual interest and an emotional interest in what you're doing. Don't take a job because you think it pays the best or it sounds good or your friends are doing it. You have to believe in it. Do your research and do your... At Life, the NYSE US Life, we started a graduate training program. And we had, initially we said we'll take 6 graduates, first year, six graduates. We had 600 applicants, and the comments you were making before about filtering, a nightmare to filter. We'd have been better off going in a different direction, but that's the way we went. 600, and we had 6 jobs. Our HR department has narrowed it down to 50 who we invited to come for a day, and we had loads of tests for them, and maths tests and English tests, and they had to present individually, they had to work on a group project, they had to attend a lunch to see what social skills they had, and we narrowed it down. Not one British person that came, so a few British people made the final 50, but they were the worst 6 of the 50. Because the British people, they're used to working in the city and all the glamour of all that. And they came and then you asked them, why do you come and work here? And they said, oh, I want to work in finance, I want to work lots of money. Why do you want to come and work for Life? You're a big company, you want to make lots of money. They'd done no research, no work, no nothing. They were just right off the list. The people who really wanted the jobs prepared to work. We hired a Bulgarian, we hired a Slovakian, we hired a French person, I think we made a hire to a Chinese person, who really were hungry and had nothing in parallel in those countries. As long as they had a work permit, we'd hire them, okay? So we weren't going to get a work permit for them. But the point I'm trying to make is, it's not that difficult to prepare for companies now. You've got the internet, right? When I started work, there was no internet. My first PC was an Apple PC at Stanford Business School that was a glorified word processor, really. Okay, we've come a long way. I get really annoyed now when I see people on the desk not talking to each other across the desk, but emailing each other across the desk. And some of you in the audience are guilty of this all the time. And then I say, have you contacted the clients about something? And they say, yeah, we emailed them. I said, well, first of all, you don't know whether the person's got the email, seen it. There's no response to it. Why don't you be really innovative and pick up the telephone? Or why don't you really shock yourself, get off your butt and go around and see them? So whereas we all dazzle ourselves with technology, at the end of the day, relationships really matter as well, okay? So it doesn't matter where you start, matters where you finish. So a little bit about exchanges. So exchanges are really liquidity pools, okay? They're not the firms that trade on their own account. They provide liquidity pools for people to transfer risk or take positions or have a view or whatever. Highly regulated market. The regulation is very important as well, and you have to gear what you're doing to that very heavily regulated market. But essentially, we're running a business that facilitates risk transfer at the end of the day. And the better exchanges have good technology, a good product range, good distribution, understand their products, and innovate and change. And I say to people, please take risk, take personal and professional risk in doing new things. Not all going to succeed. I'm saying don't be afraid of failure. The second thing is make clear what the common vision for the company is. Make clear what everybody is supposed to be doing, what the values are, what we're trying to do. And then make sure that the people who work for you buy into that common vision. Because if they don't buy into the common vision, you're just pushing them and bullying them and telling them to do it. And people will do things for money, right? And they will put up with it and they'll get on with it. But again, in their hearts, they don't really believe it. But if they believe in what they're doing, the performance enhancement and the efficiency just really takes off. So if you have a common vision for your company, whatever you're doing, sell that to the next level down and get those to be your evangelists throughout the company, you can achieve really great things. I'll leave it there. Thank you.